All right, recording. Nice. Let me share the screen. And right. So good afternoon, good evening, good morning, wherever you are. Good night. Well, wrong time. And right now we are on Sunday, 8th March, and it is about 4:30 p.m. India time. Sunday, 8th March, 1 week into the Gulf War or the new Iran Israel US conflict. And this is a market review that we're going to do now. And essentially, we're going to cover all the global markets and see how the markets have been holding up. Just take down any information that you see on the screen so that you know how to get in touch if you want. WhatsApp is the preferred method. So feel free to get in touch if you have any questions, etc. Please note that I am not in any way a financial analyst, a registered financial analyst. This is not financial advice. Please check with your financial advisor before taking any action on your end. This is purely for information and educational purposes, just sharing my views. And these are not recommendations to buy or sell anything at your end, right? So having said that, let me jump in. And what you should be seeing on the screen right now, well, I was doing something before I started, is let's start with the US markets. And what I'm going to do basically is that I'm going to uh, do a longer term review using the weekly setting on my charts. And we're just going to, uh, yeah, just look at how that weekly setting is showing us for, say, a longer term trend on how the markets are behaving. Right. So remember, we are 1 week into the uh, new war in the Middle East, with things getting from bad to worse. And there was a fire that broke out in some Kuwaiti tower right now. And well, let's see how this goes and how the market's reacting to this and many other things. All right. So jumping in into the market review. I'm doing this after a long time, so might be a little rusty. So request you to kindly bear with me and do share your feedback at the end of your viewing. All right, starting with the Dow Jones Industrial Average, Dow Jones Industrial Average Index, yes. And this is a weekly chart, remember. All things considered, one would think that, this sort of a fall, which is basically a 3% fall in the last 1 week, along with an earlier 1.3% fall, so about 4.5, say 5% fall from the peak, is actually not all that bad, at least for the US markets, all things considered. The Trump thing that happened in March of 2025 was actually a much, much worse correction than what we are seeing right now. Of course, things could get out of hand, but as of now, things are looking like more or less just another normal correction in the US markets, and things will perhaps just turn around. Who knows? Let's see. Then looking at the Dow Jones Composite Index, similar story, though a sharper fall, perhaps a little bit in the last 1 week. Looking at the broader market S&P 500 index, this is actually quite surprising. A nice rounding top. There was a nice bearish divergence that had happened in October, November of 25. A sort of rounding top in January, February, March, let's say, of 26. And now we are sort of somewhat seeing some sort of a correction. One could argue that maybe a bit of, you know, uh, a neckline is there somewhere, and it could be broken, but maybe just a little too premature to say that for the rounding top. We could just be actually sitting there. If I were to draw it, it would probably be here. just to get the best fit line. Right. So yeah, thereabouts or a little lower and say there. And we're just sitting there and looks like, we'll see how this turns around. One day, half a day is a long time when you have geopolitics and anything could happen and the markets could turn back from here. Or are we looking at the S&P 500 index maybe going down to 6,600? That's another 100, 200 points. I wouldn't say at best, but yeah, that would bring it to a sort of normal correction. If you look at the tech-heavy Nasdaq index, Nasdaq 100, that also more or less behaving like the S&P that we saw, and one could say just sitting at the neckline. What is interesting and what is very uh, different about this particular index, as you can see, is that in the last 3 weeks, it's actually been showing some green candles. And maybe, of course, all the AI giants are there. And is this a base that it is forming and then it goes back and the Nasdaq turns back up again? Or is this unlike, just to review, you can see the S&P has been going down and even the Dow Jones has been consistently going down. But the Nasdaq in the last 3 weeks has been showing some green candles. Again, remember, this is the weekly chart, right? So interesting separation already that we're seeing between the tech stocks and the non-tech stocks in the US. And if you look at the Russell 2000, which is a very big 2000 index stocks in the index, then interesting that it's coming to perhaps an important old life high, which is just about 100 points, 50 to 100 points lower than where we are right now. And then we could perhaps see some sort of a uh, base that is forming. Now, that's as far as the US is concerned. Very quickly jumping to the north of US, the Toronto Stock Exchange, very interesting, has been making consistent life highs, and even this bearish divergence that happened in last year did not pan out in market correction, and the market just continues to rise. So something really strong happening in Canada, and it'll be interesting to maybe look at the Canadian Stock Exchange separately and try and figure out where the strength is coming from. Right. So despite all the rhetoric and the threats by the Trump administration as far as Canada is concerned, the Canadian stock market seems to be quite resilient and doing quite well. Definitely outperformed the US market as of now. Looking at the DAX, well, DAX also only in the last week it has come down. Again, as you can see, not coming down to any big significant corrections that say one might expect, and just coming to these look like more like normal corrections in the market, and already was doing a big sideways view move the DAX for the last 6 months, last second half of the 2005, tried to make an attempt, sort of a double top, not really a good one, but sort of a double top that has happened now. And then correction. Maybe it again takes support just few hundred points below, and then who knows, it goes back up. It'll be interesting to see how that pans out. Then looking at the French index, the CAC 40, it was on an uptrend, made actually a new life high, as you can see, and only in the last 1 week it has corrected. And this one has been a pretty decent correction, almost 7%. Again, coming to perhaps important previous life highs, and then we'll have to see how this moves on from here. So at the other end, the UK market are also doing really, really well, right? So Europe actually outperforming the US. And this is an interesting separation of markets that we are seeing. Usually the American markets and the European markets are very closely intertwined, but now we are seeing a very different trajectory for both. Quite interesting to see how this is panning out. Uh, so despite all the threats by Trump on Greenland and NATO, and whether US might even come to the defense of NATO and EU, Putin's worry, and the European economy as such really not really doing that well. The markets are definitely doing well. Um, Again, something interesting to note and something definitely needs further investigation, right? So there are obviously markets to be invested in despite all these troubled times. Looking at the Japanese Nikkei 225, again made a new life high. And this is, of course, been a long-standing story for a long time, worth reiterating here, because when we come to the monthly charts, this is what we have been saying, is that the Nikkei made a new life high after almost 30 years, and that was in August 25. And after that, the Nikkei has just been going up and up and up. And if you see, it's not a small move that the Nikkei has made after the old lifetime breakout, something that I had been discussing on my various you know, uh, WhatsApp groups and giving that input. I'm not sure if anybody acted on it, but it would be great. And what, from 40,000 to almost 60,000, that's almost a 46% move on the Nikkei in what, about 7, 8 months, which is like really, really fantastic and impressive, right? This is okay. This is something even I am really um, Hmm, a little bit of a loss for words because I did not expect 46% move. I knew it was moving up, but somehow I had just not calculated the move. And a 46% move on one of the world's most important indices, one of the most important economies in the world, third or fourth largest. And that has, the index has gone up 46%. Fantastic wealth creation. Wow, that's a market to definitely closely watch and see how one might be wanting to participate in that. All right, going back to our weekly charts. So looking at Australia, probably time to look at a lot of other regional indices and include them in our studies now, seeing what is happening in Europe and Japan. This is Australia. Well, really sort of a triple top coming down with Europe and US, you could say. But again, not anything major. It's more looking like a normal correction, very close to an important old life high of about 8,500, just 200 points below. And do we turn around from that? Okay, this is a bit of a going across geographies too much. But SSE, this is the Shenzhen Stock Exchange Index, and this is a big mover, right? Where is this? Uh, right. So the one thing that I wanted to show here is this important move. I'm going back to the monthly chart on the Shenzhen, and on the monthly, right? This is something I'd shared with some folks. Again, we have a triangle that has been going on since the 2007 peak. It's amazing that one of the few markets that has not gone back to its 2007 or pre-2008 crash peak. Almost all the global markets have, but the Shenzhen has not. But having said that, it's done a good almost 20-year consolidation, you could say, 19 years consolidation, as you can see, from 2007 to 2026, and sitting at a very critical juncture, which is with this triangle breakout. And a very important thing is that the volumes are significant here in the since 24 or second half of 24. Looks like some concerted buying has been happening by institutional, the wealthy guys, the guys with the foresight. Of course, when this happened, we are talking about 2, 3 years back. The Iran-Iraq war was, sorry, what am I saying? The Iran-US-Israel war was nowhere on the horizon. Trump was not even elected then. But it's interesting that it's holding up despite all the volatility of Trump tariffs and then the war currently. And I suspect, I mean, Charts always know much more than any set of individuals can get together, even the brainiest people. This has been my position about technical analysis for years and decades now. So are we looking at something happening on the Shenzhen Stock Exchange? Is it saying something about the China story that we don't know? Is it something that we should be tracking more carefully and more incisively? And then, maybe who knows, find what opportunities are there. So again, remember, this is back to the monthly chart, but this is something very, very significant, something to follow in the weeks and months ahead. Just reminding you how the Nikkei performed 46% in 6 months. Why can't the Shenzhen do that, right? Coming to the Hong Kong Stock Exchange, well, very quickly, just to point out that on Friday, it took support of the 200-day exponential moving average and the HSI and has done a nice bullish candle on that. All said and done, however, Hong Kong also, let me go to the monthly here. Uh, Very far from its life highs. Again, that has happened in 2018 and a sort of another one in 2007. And you could say this is a multi-decade consolidation of sorts. I mean, even if I were to just take it from there, that's from 2007. And of course, this is not looking like the Shenzhen exchange, but the Hong Kong exchange and the Chinese stock markets are definitely closely correlated. So something to be mindful about and see how this moves. So does the Hong Kong and the Hang Seng move up with the Shenzhen later? Both of them are sort of not sort of, let me rephrase, in the last few weeks are definitely consolidating sideways and doing something interesting. uh, all right, somebody at the door. Let me do I pause recording? I'm not sure where this is. ah, Pause. All right, so hopefully recording is back, right? Okay. And so as I was saying, the Hong Kong and the Shenzhen, look at them closely, and maybe they are not, maybe I'm quite sure there are opportunities there. For those of you who are interested, remember, just keep in touch, and because we're going to do hopefully a lot more of this, and you should perhaps just um, where is that yeah, just so that, just a reminder in case you want to just capture the contact information to know any updates and what we might be doing in the future, right? Um, Again, reiterating, we are not any financial advisors. This is not any investment advice. This is just information and education, observations that we have, and anything that you do is at your own risk in consultation with your own financial advisor, right? And yeah, looking for feedback and looking forward to hearing from you. All right, going back to the market reviews, looking at Singapore now. Interesting. So Singapore was very close to its life high, but as you can see, it was actually hesitating there. And let me go back to my weekly. A double top it had made and was trying to perhaps move up before the uh, Israel-Iran conflict broke out. So 2 weeks back, it was at its life high. And in the 2 weeks since, it has corrected about 7-8%. It's sitting at the 50-day exponential moving average, close to an important life high. But anyhow, showing signs of topping out, had shown signs of topping out, might be something healthy to look at. Nothing much. Kospi, okay, this was one thing that the Korean stock exchange, okay, obviously seeing this after a long time, big, big move that was happening. Again, you're seeing the same story to reiterate. This is 10% down on close, but actually it was almost 20% down I'm not sure why the South Korean stock exchange got so spooked, if anybody has any insights on that, but it really, really did get spooked and went down very substantially. There was apparently, I was reading some headlines that there's a lot of pullout of foreign capital from the Korean exchange. Again, not sure why. But again, a lesson to be learned here. So many lessons. Look at this. Many years, this is the 2008-9 crash consolidation, broke out, came down. This was 2020 COVID, the recovery, fantastic recovery from there. And then only recently, in the last, again, it's not a market I usually track, but I do really want to start giving more attention to foreign markets now. So 2023 to 2025, 2 years of almost doing nothing, and then just one, vertical type move from 2,500 to 6,300. That's almost 100% move on the South Korean stock exchange in 1 year, right? In 1 year. So maybe this was just highly, highly overbought for whatever reason, and that correction and the Gulf War now was just an excuse and a trigger that was waiting for the bubble to burst. I don't know, but this would be interesting. But this is fantastic. I mean, if one had tracked this and invested in a Korean index ETF from wherever, wow, what a fantastic return on a major index, right? Okay, this I think is the Indonesian exchange, right? Or I keep forgetting. No, Indonesia is here. Sorry. Right. So Indonesia, I'll come back to this one other one later. But this is a massive move. Again, Indonesia 2025 July from 229 to 350, 339. That's almost a 50% move and a big correction. Some correction has happened before. There was some local news there, which obviously I don't know. And Indonesia seems to be going down, may go down further and then form a base. And then looking at the rest of the world, let's see very quickly. Now moving on to perhaps where we should be. Oh, Malaysia. Uh, Not much, I think. Okay, was doing well and was probably on its way to coming back to its life high, perhaps. And then the Gulf thing has just cut it short. But look at it last week. It's made a nice green candle and it's actually looking quite um, I wouldn't say bullish, but look at this, right? Okay, it took support here, right? An important previous top and has gone up from there, right? So that's definitely their technical analysis for you, something to ponder about. India Nifty really been broken down. Okay, a lot of studies. Sorry about the mess. Let me just hide it, hide it, hide it, hide it, hide it. Right. Viewers, this was the double top that was in the making from August of 2024, actually, if you think about it. So if you think about this, this was you know, September 24, and the market has not been able to cross that. So effectively, for the last 1.5 years, the Indian markets have not made any money. And as you can see from the previous charts that we quickly reviewed, there was actually very, very good moves in the rest of the world. But India simply did not follow through, and we did not have the up moves that the rest of the world saw, including the US, right? So India overbought or fundamentally expensive, whatever the case might be. We are definitely not looking very healthy. And this double top is now sitting at an important support of around 24,500. So far, last week, it has been taking support. If it breaks, then are we going lower to maybe 23, maybe even 23,500, another 1,000 points fall? Cannot be ruled out. We'll do a more detailed India review yeah, in a separate webinar, but definitely India is an underperforming market. All right, now coming to, okay, let me just clean this up first because there's some too much studies there and I will come back to this. Hold on. Mm, all right. I'll just come. All right. I'll come back to Tadawul, that's the Saudi Stock Exchange, in a bit, but just want to cover the rest of the Gulf markets before we go back to Tadawul. So this is the Abu Dhabi market, and actually that was doing quite well and had been making some good moves prior in 2026, went from say 10,000 to 10,600. That's a 6% move. And before that, also some really impressive moves in through 24. And it came back to its basically its life high of 2022, right? And I think all things considered, if this Gulf thing had not broke out, then probably it was set to make much higher life highs. But now that it has broken out, and this is the uh, okay, let me go back to, sorry, this is the daily. I wanted the weekly, right? So that's the weekly chart for you. You can see the double tops more clearly. And a big, 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 big fall from 10,600 to 9,900. Relative to the rest of the markets, this is definitely a bigger fall. And that we are talking about a fall which is approximately 7%, right? Uh, in right, so 7% down after the break of the mm, hostilities. But what is interesting is you can see just before the hostilities broke, so we have about 1 week into that, but before that, ignore the last two red candles, we had made a top, and it had was at a double top, and it was sort of hesitating with those big upper shadows, wicks, about whether the market wants to go up or down. So again, the beauty of the markets, that or charts rather, technical analysis, they're always hinting at something that may happen. Of course, did the markets know that the war will break out? I don't know if the markets knew, but definitely some people knew, basically on the Israeli and the American side. And well, who's not going to use that information to, profit themselves nowadays in the world that we live in? Same thing for the Dubai exchange, right? So this is the DFM. So Abu Dhabi, what happened? Oops, right? So same thing for the Dubai exchange and Abu Dhabi, Dubai, all basically, doing something similar. Big falls that are happening. Uh, Except that I'm just looking at, yeah, so the Dubai exchange was not anywhere close to life high, though the Abu Dhabi was. So again, some differentiation going on there. It'd be interesting to see what that might be later, right? But big falls in the Dubai exchange too. And then you have the Qatari exchange, and I think let's just put the. So these are all the ones which are so close to the conflict. Iran is just 50, 100 kilometers from their borders and their coast, and this is the last 1 week. So from 11,500 all the way down to 10,500, about 8, 9%. I don't know. Again, I would have thought that maybe we would have bigger falls given the nastiness of the conflict. But obviously, I mean, 10% falls somehow don't feel that big, in the overall context of things. But now I want to come to TASI. And TASI is the Tadawul index for Saudi Arabia. And what is fascinating about TASI right now is that you're seeing in the last, this is the daily chart, by the way, in the last 1 week, it's actually gone up. All right. So Saudi Arabians feeling quite safe, and the market there saying, you know what, we are too far away from the conflict, and it's not really going to affect us. So clearly, you can see the very contrasting uh, opinion or the movements of the other major Gulf markets. Abu Dhabi, this is Dubai, right? This is Qatar, and here we have Tasi, right? So and a sort of triple bottom or maybe quadruple bottom is, even if one wants to look at it, if you take it on a closing basis, you're going to see it better. That on a closing basis, this is actually creating a quadruple bottom. So I don't know if Tasi is actually headed for some really, really good up moves now. And this is, by the way, we are on a Sunday and Tasi is open on Sunday. And this is the live market that you're seeing. 35 minutes to go before the Saudi Arabian Stock Exchange right now closes. But like I said, doing quite well and outperforming rest of the Gulf markets, right? Um, so to summarize very quickly on the global equity side, we have Europe looking good. We have Saudi Arabia looking good. We have Shenzhen looking good. We have Hong Kong looking good. And we have the Nikkei definitely looking good, right? So these are the places that are definitely full of opportunity, and we need deeper dives into that. And on this list, I think maybe next time we do it, I will add a larger list of global indices so that we can maybe get a wider range of things. What's suddenly reminding me is this Shield of America's meeting that happened in Florida. South America coming very much into the fold of North America, and there will be economic consequences. That's for sure, right? Where is that heading which was there? Uh, hmm, this is the Guardian.com, and I remember seeing the news. There's a big picture of all the South American. There we are. I spotted it, and yes, right. So this is going on, and next time maybe we include the South American and some African and more Asian markets in our analysis. And there could be opportunities, stock market opportunities that are there, investment opportunities, because this geopolitical reordering of the world. All right. So spoken for over half an hour. Didn't think it would be this long, but anyhow, there we go. So reminding you of, again, just the nature of the session. This is only for education and information purposes. This is not investment advice. Please take any decisions at your own risk with your own due diligence and investigation, and along with consulting any financial advisor you may or may not have. And if you want to be in touch and to be updated about future events, this is the information. You know how to get in touch, and I look forward to your feedback and inputs, right? With that, thank you. Have a good weekend, and I will see you in some other webinars. Hopefully, we're going to do some India market reviews, bullion reviews, commodity reviews, and maybe even a crypto reviews. And okay, definitely going to do Hong Kong, Shenzhen, and Nikkei review. May not be, this will happen hopefully in the coming few days, in the coming 1 week, right? As we dig deeper. This is just the start. Thank you for your participation. And like I said, looking forward to your feedback. Thank you and goodbye.